Hi everyone, it's Matthew Haraberta, Chief Investment Officer at WellFull by Bernardo Wealth. Just wanted to reach out to you as we're now halfway through the year to give a recap what happened in the first half and give our outlook for the remainder of this year. So if we think back to the end of the first quarter when we gave our update, we predicted, which was no surprise, that as we saw oil prices go higher, that inflation would go higher, that interest rates would go higher, and there'd be some turbulence in the markets. A lot of that has happened, but the thing that we find so interesting today is that as the recording of this video, oil on a per barrel price is only up about $5 to $10 approximately. Every day we're still getting a new headline about how there's no formal agreement, but that there's an understanding. And while we do continue to think that there's going to be headline-driven risk within the market, we are of the opinion that it's unlikely to see oil going back to the place where it was 2 or 3 months ago. We think that just how we saw inflation go higher over the last 3 to 4 months, in the next 3 to 4 months, as energy prices are now lower, it's no surprise we should expect to see headline inflation go lower as well. Now, while that is very important, we continue to look at core inflation that strips out the volatile energy prices, and it's been significantly higher, again, running at almost just under 3% or so. But the big change now is that Jerome Powell was the head of the Federal Reserve when the conflict first started, and now Kevin Warsh is at the helm. In his first address to the public, he was very clear with a much shorter statement that inflation is their primary target that they are going to try to tackle. They haven't given too many specifics. It seems like they're not going to have as open of a hand. They're going to keep their cards a little bit closer to their chest about their framework and how they are going to tackle that. But it was very clear to me, I think the rest of the capital markets world, that that is the primary objective, that right now they think the labor market continues to be stable and they're going to primarily focus on inflation. So what does that mean for the remainder of this year and our outlook? So within the equity markets, I think one of the things that has been so interesting as we're going through first quarter earnings is that AI is everywhere. That said, we're starting to see it really spread to many different industries and companies within the economy and the stock market. So we think that while the big names, again, we had the SpaceX IPO, we've seen the value part of the market outperform this year, but we've seen the growth part really come on strong post the conflict. We think that the remainder of this year for the next 6 months, it's really going to be about the dispersion trade. It's about how companies are really utilizing these new AI tools, not only for potential revenue growth, but also for cost savings. So we think that there's likely going to be continued margin expansion within the S&P 500 and most broad indices that we invest in. So that's the primary thing that we're looking at on the equity side. Whereas on the fixed income side, if they're looking to get inflation under control, and we think that interest rates are going to stay elevated in order to do that, we do think that it's prudent to stay defensively positioned. We do not want to purchase longer term bonds right now. We've decided to stay in the more intermediate and short term. We continue to take credit, or we prefer to take credit risk rather than duration risk. That is no change than what we've been saying for the last 3 to 6 months or so. And again, until we see inflation start to come down materially, we think that there might be some cracks if they are going to keep interest rates much higher for longer. As of right now, it's about a 50-50 split whether or not they're going to keep interest rates unchanged or potentially even look to hike, where if we think back to the beginning of this year, the market was forecasting anywhere between 3 to 4 interest rate cuts. So looking forward to the remainder of this year. We hope you're all enjoying your summer. And if you have any questions, please reach out. Look forward to hearing from you. Thanks so much.